Welcome back, and another week of talking technical. And of course, as always, we are flooded with requests. Thank you for those that are using our email or even tweet us, and even on Facebook telling us which share would you like to be covered, because we will do it for you. Remember, this is a service to the public, and the first request is Nampak. The viewer asked, is there any chance for this share to turn around? Well, what makes me happy is this little dragonfly candle that's right here at the end of this chart. And that tells me that there's some buyers accumulating the share. But first of all, let's give you the warning. The warning here is clearly this head and shoulder formation. That makes me a little bit nervous, because this head and shoulder formation can still play out. There's the left shoulder, there's the head, there's the right shoulder, and we're sitting on another right shoulder. And yes, the big level to watch is 86 cents. Below 86 cents, that's the neckline of this head and shoulder formation. We can see some ugly things happening. The first thing will be the conservative target. Let's give that to you. Before we give you the positives, let's give you the negatives. It can maybe take the share down to 78 cents. And on the other hand, from the head to the neckline, the full target will be the following. There you are. Let's do that. That will be 66 cents. So if you do believe this neckline, and sometimes this neckline offers a support, and if you believe in this dragonfly candle, this dragonfly doji candle, to tell you that people are buying the dips, you can maybe say to yourself, well, let's nibble. So buy as close as possible to 86. Make use of a stop loss. There's my stop loss. My stop loss will be 81 cents. And if it starts to go up, we can easily see that this little resistance around here, that is the big one to watch. Let's just throw that line in there for the viewer, because his question is, will it ever go up again? Yes, it can maybe go up. Let's have a look here. I just want to draw in this consolidation. We're sitting here on a massive consolidation. There you are. We had this false break, and now we can say, okay, there's the consolidation. And for me personally, the share must go above 106 to make me positive about the share. And what can happen if it breaks above 106? We can see the share recover well. Let's do the projection to the upside. There you are. It can maybe go all the way back to 122. And for me, quite crucial is, look at this 50-day moving average. If we can get above this 50-day moving average, and I always use this as my guideline for medium-term investors, above 99 cents, it can maybe show us the first sign of strength. And of course, above 106, we can see it all the way going up to 122. But I think this is my clue. This is a strong clue, and the share mustn't go below 85 cents. Otherwise, we can easily run into problems. And maybe one day, we'll on the show tell you that this gap is closing, and this gap is, can you believe it? But I think there's hard work to be done here, between 164 and 195. Now, yeah, let's have a look. Well, the next share that we want to look at is Walt Disney. One of those big companies in the world, massive company, all in the entertainment world. And what do we see here? Okay, first of all, I see a beautiful support line there. Look at that. I like that. There's a low, higher low, higher low. That's positive to me. And if we combine those two lines to get you a nice resistance line, oopsie daisy, you will see that this share is slowly but surely working its way up in a ascending channel. Now, I always know that the ascending channel is positive for a company, but it is only positive while the share moves inside this channel to the upside. And what I do pick up, we got this breakaway gap. That's usually positive. There you are. The gap is between 97.70 and between 96.91. And while this gap is open, the momentum to the top is clearly in place. But for me personally, I think we'll find some resistance when we get to this level, 99.54. We can actually say $100. It needs to get above $100 to move and see if it can make this line into a support. Sometimes you do find that. You find that it acts as a resistance, then the share breaks up and it starts to move above it and it builds on that support, and that will be positive to me. But for me, if you want to buy it, I would rather wait for it to pull back to this line. Although this gap is open, I'll wait to buy it at 95.35 for a pullback. My stop loss will be the low of this candle. There you are, 94.37, and then hopefully it can move back again up to this level of $100. That will make me positive. The reason why I'm a little bit nervous, look at this. There's the 50-day moving average. The 50-day moving average is still a resistance. And that tells me, while that line is a resistance, this moving average, the momentum for this share is to the downside. And if you look at it, there you are. There's a lot of work to get back to this level where it was before at $130. And nowadays, I also heard that they want to retrench some people. Sometimes it helps with the cost to retain some costs, and then the share can maybe surprise us and go back to previous highs. But for me, let's stick to this ascending channel. Let's play safe and buy it close to the support line, and then we know we cannot run into trouble. Well, let's have a look at natural gas. I looked at this instrument a while back, and for me, it looks like that Brent oil wants to build on a base to move a little bit higher. Now, first of all, it needs to get above $80 to make me excited. And I don't know if you can remember, a few weeks ago, we called natural gas close to this level when we saw this reversal. It gave a beautiful rally to $3. I think my target was $3. Let's see, the high was $2.97. Well, call me a liar for 3 American cents. That's almost nothing. But look at the 50-day moving average. It remains all the way a resistance, and it tells you that the momentum is clearly to the downside. So for me, I say if Brent oil starts to pick up, we can maybe see a surprise in natural gas as well. But where's my clue? I want to show you this little line. There was the previous low. And of course, while we are below this low, it is negative for the instrument. Now, that's the level is there at 206, and we are trading at 201. So we can easily go below $2. And remember, and sometimes we think that an instrument cannot go to zero. Yes, it did happen to a Brent oil in the COVID period, that the share price just dropped. The instrument price of Brent oil just dropped to below zero that one evening. So be a little bit careful. So for me, I mean, the trend is clearly to the downside. Nothing is positive here. And let's have a look. If I draw that line in there, there you are. That tells you that the momentum for natural gas is still solidly to the downside. Let's do another line here. We did discuss that low there, so I'm going to use this line there. I'm going to do that. And what do we see? We see a classic falling wedge. Now, a falling wedge, we all know, is eventually a positive formation that gives you a relief bounce. So what do we say here? The share or the instrument needs to get above this little line there. There's my line. And you will see that that low is also the break of that falling wedge, and that is sitting exactly at $2.06. So for me, it will be a buy above 206. And my stop loss will be $2 on the dot. That's almost nothing. And where's my targets? There's many targets. 210, 213, 216, 223, and maybe we are just lucky it can go back to 230. That will give us a nice relief bounce. But a lot of work to be done on natural gas before everybody will get positive. In actual fact, that's one of the commodities that's the most worst performers for the last year. I think the one just before that is lumber. Just above it is lumber. But natural gas is under huge pressure. Thank you for watching the show. We'll chat again, and Visit our website, www.fransdeklerk.com, for more info. Thank you.